Hey everybody, this is George and welcome to the show. So here's what's really interesting. According to what the media is saying, home prices are down in like 50 of the states. And I'm not sure about you guys, but you see, when I was born, I was really young. And through that time, I actually learned that sometimes everything you read isn't 100% accurate. So today we're going to go through some of that. We're going to take a look at, well, what are we seeing and what is sensationalism so that you guys can make the best business decision. So remember, always here we go, subscribe, share, and like with the people that you like. Because you know what? Every time you guys subscribe, every time you guys watch this, it helps the metrics for people that are looking at wanting to make the best business decision for their families. And really, at the end of the day, that's all there is. There's no selling here. It's just good, solid information for you guys in real time. If you are interested in real-time information, not something that was happening back in February, you might want to watch this channel a little bit more. So let's talk about a little bit about what's going on. So when we take a look at our next slide here, let's blow this up for you guys. All right. Today we saw a massive amount of homes coming on market. Well, technically not today. Technically it was yesterday. Friday is always a massive list date. In fact, we had a couple of homes that went on market ourselves, and we contributed to the really big number that we're seeing, which is 1,023. Now, with that, we've got 1,211 pending homes. What's super important about that is that even though we have one of the largest weeks of homes coming on market, we still had more homes that were pending. So historically through the week, I said historically, what we're seeing through the week is for every home that's coming on market, we have 2 homes going off market. And that's kind of important to understand, because as we get further into this and you guys get to make up your own mind as to what is really happening and what is maybe a little more accurate for our market and not on the national level, albeit on the national level, numbers are still doing really well. So keep that in mind as we're looking at today's numbers and what it means. So let's head over to our next slide here. Hang on. Okay. So when we take a look at these metrics here, even though our last week we were like 12 or 18% above, month over year over year as far as total homes available, we're at 23.1%. Now, for those of you that have been watching the show, I said that these numbers were going to start coming down, and in fact, we're going to flip to where our inventory is probably going to be negative. And you might say, what? So if you guys go back, because, we've only been doing this since 2007 with a pretty high accuracy, even had a great chat with Freddie Mac yesterday. Where somebody had mentioned our channel. We had a chat with another economist. Super cool conversation. Our head shed is not as big as theirs by any stretch, but they were really interested in the consistency of our metrics. How did we arrive at them and things like that? And actually, we got a thumbs up, and so it's interesting. We'll see if anything comes out in their reporting. Who knows? But anyway, still fun to get a call from Freddie Mac. All right. So when we take a look at our numbers here, we are actually we're actually starting to see a normalization for 22 to 23. So 2020 and 2021, okay, those are the ones we kick out because they were so abnormal to our normal market. So when we take a look at what we have for inventory, what's super interesting is that when we have, and we take a look at this, when we take a look at what happened last year versus what's going to happen this year, we are right on par. As you can see, the first arrow there on April, month end, we had 5,657. And then in May, we had 7,970. That's when we started to see that shift with interest rates going up, inventory going up, buyer level, interest coming down, because everybody was used to the 3%, 3.5% mortgage rates. And well, guess what? We were in the 5s, and then we were heading into the 6s. And then we started to bump into the 7s, and everybody started pulling back. until they started to adjust. They started to acclimate. It's like when you jump off the dock and you jump in the water and you're like, well, that's cold. You know, it's a shock, right? And then all of a sudden it's like, okay, this is not so bad. Okay, I'm good with this. And then you tell your friends, come on in, it's warm. Anyway, so when you take a look at everything that is happening and everything that's going on, these numbers that we are seeing are going to change, meaning that we're going to start to see that stabilization that we normally do. And in fact, somebody said, George, what the heck, man? You said we had low inventory. What should it be? Well, funny enough, we are we are actually about 10 to 12,000 homes short of where we should be. And I didn't do a 5 or 10 or 15 year window to show you guys, hey, our inventory is still super low. Point number one to that title is to how accurate is it really? Well, let's keep going. All right. So when we take a look at new construction, you can see our new construction is actually kind of bopping right along. We have somebody said, oh my gosh, George, did you hear new construction inventory is up, 100%. Yeah. Okay. You understand that if you have one and you add one, that's 100% increase. I said, when you deal with really tiny numbers, any significant or any amount of change is going to have a big difference. And that is super important because look at this. We have a whopping 1,700 homes available in half of Washington state. That is peanuts. When we take a look at just the numbers alone, as far as what we're looking at for actual sales, our pending sales are up. Holy smokes, we're up 18.5% year over year. If we take a look at the same month in April, year over year, just the month of April, and we're only on April 15th. By the way, happy tax season, everybody. Hope you got your taxes in or file your extension. Anyway, we're up almost 35%. Well, that's a pretty significant number. 35% is pretty good. But really, at the end of the day, it's about, about 70 properties. It's not a huge amount here. And again, that's the half of Washington state. That's a pretty small number, all things considered. Perspective is everything, right? All right. So when we come back and we take a look at what's going on as far as trends with foreclosures. So when we take a look at this slide, we can see, let me blow that back up again. You can see that again, some of those numbers look abnormal. I mean, holy smokes, look at that. Almost 130% year over year increase in just inventory alone. But that's pretty small considering that, our solds are only 6 off for the entire year. Again, half of Washington state. And then, of course, pendants are only off about 9% or 99 homes. That's peanuts. Okay. Our inventory for REOs or foreclosures, look, it's horrifically low. We are still one of the top 5 sweet spots across the United States. So lenders right now are REOs, bank-owned properties, they're doing well. Why are we seeing some of the slowdown? How come some of those, active homes haven't gone pended yet? Well, because those, the banks or the asset managers are getting a little greedy, like some of the sellers were there for a while. And we are not seeing those going off market because buyers are super smart and they know what a good value is. They do paint, carpet, vinyl, they get it back on the market and they're trying to get market value. And they're just pushing price just a little too hard. Why? Limited inventory and multiple offers are still happening. Interesting. Prices are going down. Interesting. Continue to watch. Make your own decision. Here we go. All right. Moving on. We take a look at, let's blow this up. It says mortgage rates decrease slightly. Okay. So this was the day before yesterday. Mortgage rates decreased for the 5th consecutive week. Incoming data suggests inflation remains well above the desired levels, but showing signs of deceleration. All right. Why is that important? That's important because we're starting to see a little bit of normalization on the inflation with some of those numbers. Now, remember, right? We look at bonds, we look at mortgage-backed securities, we take a look at how they translate with 10-year treasury because that is the indicators of where our rates technically are going. And that is super important for you guys to understand and to remember, because like when we take a look at Freddie Mac here, you can see that the rates were down, according to Freddie, just a hint. They're down to 6.27. They were a wee bit higher, and the average 4-week average was 6.32. What's even super interesting is when we take a look at the mortgage, backed securities and the bond rates themselves, you can see that the mortgage, or the 30-year and the 15-year, bumped up ever so slightly. Not uncommon based on where we're seeing things. But when we take a look at this, here's your mortgage-backed securities. When the mortgage-backed securities come down versus the arrow on the right where we want them to go up, then you take a look at the 10-year treasury. Those numbers are up. And then in technicality, we want them down. Why? Because when the 10-year treasury come down, rates come down. When the bonds go up, rates come down. But when the bonds come down, rates go up. They work inverse of each other. The Feds do not control long-term rates. They control what lenders lend to themselves: credit cards, commercial loans, HELOCs, home equity line of credit is a HELOC, credit cards, car payments, things like that, car loans, and commercial real estate, CRE. You've probably seen that. People are saying, oh my gosh, commercial real estate's going to be in trouble. And they potentially could be. That's why you see some of the bigger banks bailing out some of the smaller banks, because they have cross-collateralized loans, and it's in their best interest to make sure that they keep them afloat. But commercial real estate, when the Feds go from basically net zero and go to 5% interest, that affects the commercial lending side, especially if they're doing prime plus, prime being the par pricing plus the profit. So if you go from a 3 to 4 to 7% in a very short window, and yours is adjusting accordingly, of course there's going to be some commercial issues. Not unexpected. That's why the Feds also, I think, are going to be at their pivot, which means that we will predicted hit our recession, which we're kind of already in, but it'll be formalized when they do that pivot. Interest rates historically come down. Home prices typically go back up again because interest rates come down, more demand. Interesting. Keep that in mind as we roll on to our next one here. All right, so look at this. Let's get back to this. So it says home prices are falling in more than half of the U.S. This is from Redfin. And you know what? Daryl Wimberly is super, super smart. She is super, super smart, right? And it shows here that we have a 10.9% decrease in home values. And I read this and I thought, that's not that can't possibly be accurate. When let's maybe throw the logic camera out here. Okay, so let's go on to the next one before we do this. I'm going to hit you with you guys with a quick logic camera, right? All right. So many buyers, right, aren't held back because of high mortgage rates. It's a lack of inventory. Okay, so we have an inventory issue. Okay, several clients here are serious about buying, but they're actively looking, but can't find what they're looking for. They're waiting for homes to trickle in, and trickle in truly is a very good point, because remember, we're at 6,900 homes today. We were at 62, but we had a big bolus of new homes coming on market, which I'm telling you, we on the listings that we put on, we are already getting multiple offers on that. So we are going to be a statistic on Monday, right? Here's the funny thing. You have a trickle of homes, because we should have 10 to 12,000 more. We should be at anywhere between 16 and 18,000 homes today, and we're at 6,000, 7,000 homes. So keep that in mind. Inventory is super low. Interest rates have been coming down. Massive pent-up buyer demand. We're seeing multiple offers. Keep that in mind, because, again, I dispute the title. All right, moving on. So when you take a look at CoreLogic here, right? So it says here that this week 2 pieces of data were released. You got to love it when something's released, like when they let me out. Each hinting at home prices that may have bottomed out. Host Brian Lazine first discussed this on Wednesday with Fortune article with CoreLogic numbers. This is CoreLogic. CoreLogic is a massive data provider. According to CoreLogic, home prices increased for the first time after 7 months after a decline. And prices may actually be stabilizing. Well, that's a little different, but I tend to side with them. Why? Hold on. When we take a look at this right here, oh, not yet. We'll come back to that one. So, okay. So here comes the logic hammer. Think about it. Interest rates are up. So people's buying power is a little bit lower, right? That's natural. If it costs more, if you can afford $1,000, if the bank says you can afford $1,000 a month, okay, and interest rates are at 3%, that means you can buy more of a house. Okay, but that doesn't mean that your $1,000 a month changes. Interest rate goes down. The monthly cost of that house is less. But you double that, you go up to 6%, right? Well, that house now costs more. But if you can only still spend $1,000 a month, that means that you can only look at buying in a lower price point. Okay, so that means if everybody took that one step back and bought at a lower price point, does that mean that home prices went down? Okay, hold that thought. We have a limited inventory. We have multiple offers. We have a pent-up buyer demand. Interest rates are on their way down, so the buyers are definitely coming out, but yet they're saying that our average home price is going down 10%. We have multiple offers. What is it? Is everybody just, it's a crazy race to who can get to the lowest offer that the seller will accept? I don't think so. I don't think so at all. In fact, I think people are missing the point that there's a difference between the average sold price of today versus a home value. And those are two different numbers that I think get convoluted, all right? Because it is a difference. How can you have multiple offers and a limited inventory with a pent-up buyer demand? Like there was 9 offers on the house that we made the other day. 9 offers. And do you think we went, okay, the list price is $1,000,001. Do you think we started going down? I'm going to offer you $1,205,000. The next guy says, no, I'm going to offer you $1,000,000. And the seller's going, keep it coming, keep it coming. You think that's what they're saying? No, that's not what they're saying. It's going up. So make sure that when you're reading titles and you're reading information, that it's accurate. That's all I'm saying. My humble opinion, sitting here in the single head shed. Well, I got a team of 8, so we have 8 little head sheds here. Having fun. Anyway, here's an important thing for you. This is kind of fun. All right, let's blow this up. Look at this. Seattle is one of the best cities to move after graduation. Now, I thought, graduation from preschool or something like that, but I guess, because it did say that when I was born, I was really young, but I had to advance, I guess, to the collegiate level. But anyway, nonetheless, that's super cool that, we ranked #1 again in something other than in taxes and whatnot. And those of you out there that are sellers and buyers, hey, listen, make sure that you are reaching out to your senators, your Congress people, and down at the House in Olympia, because yes, they want to raise the taxes on when you sell your home, called a real estate excise tax. Or anyway, you need to put a stop to that. You need to let them know. If you guys sit back, those of you that are going to sell, you're tossing away, again, additional thousands and thousands and thousands of dollars. They just need to quit spending, but I'm just telling you, get off my soapbox. Make sure that you oppose that. Make sure that they continue not to take dollars out of your pocket, but to actually spend more wisely on what they do get. My humble opinion. Thank you. Anyway, with that, hey, remember, like, subscribe, share. Make sure that you share. And if you have feedback, give it to us. If you've got questions, keep those coming. We answer you guys. Typically, we are T-minus 30 minutes. We're like 28 minutes on a response. And of course, we do send out videos for the questions that are a little bit more involved. In the meantime, it's going to be a beautiful day today. Happy again, April 15th. Have a fabulous tax day. And I will see you on the next video. Take care.